Welcome to part 2 of the ISA education video. In this part, we'll talk through the key contract elements to note. In particular, we will go through your student obligations, repayment term special cases, as well as default and default implications. Let us get started. Okay, so let's start with your student obligations. Every month, you're required to report your job status, your monthly income, as well as make an ISA payment. Keep in mind, this applies even while you've not started making the ISA payments when enrolled in your learning institution. You're just supposed to make a report saying you're still enrolled. When you drop out, in case you drop out, you also need to make a report saying you left the educational institution. So this starts immediately you sign your income share agreement on the next month. Just expect to always do a report, and the moment your earning period, you should always know that your report will be coupled up with your expected ISA payments. In the same way, every quarter you'll be submitting your financial statement. Keep in mind that this will be bundled with your monthly report each and every single quarter. And at the end of every year as well, also bundled with your monthly report, will be a request to submit your official tax returns. This allows us to reconcile your income reports with your reported annual income to the tax authority. Cool. Now let's talk repayment term. And in particular, we'll talk about repayment term special cases. Do note that your repayment term is posed when you're not actively looking for full time employment. This could happen when you're enrolled in a full time educational institution or you decide to take a sabbatical, which is personal time off work. This is what we call voluntary unemployment. Just note that once in a while we will ask for proof or declaration that you're looking for a job when you report being unemployed for a while. So, how does this work? Let's say I have a repayment term of 36 months. However, I decide to join a master's program for 1 year. During the duration of my master's program for 1 year, that repayment term of 36 months will not count down, it will be paused. So, if I was already 12 months in, I will still say 12 months in up until I'm done with the master's program. And then it will start counting the moment I am done with that program and you're back into full time employment. In the same spirit, in case you're sick, right? Let's say extreme sickness or extreme family emergencies, we'll call this temporary hardship. We also have the discretion, right, to waive your payment obligations. And this, you have to reach out to us and explain the situation so that we can be able to waive off some of these obligations when you have a lot of financial commitments, particularly happening in the cases of healthcare. Now, let's talk about the elephant in the room, and that's default. You're termed on default if you miss your monthly income report, you miss your monthly payment obligations, or you misrepresent your earned income. Now, let's get into deeper details on this. We have three levels of defaults in total here. Level one is if you're late on your income report or ISA payments. Here, you will just have a late fine or penalty, and this will never be above the legal threshold. Consult your contract to understand the exact penalty because it's different from country to country. At the same time, it's worth noting that these fines accrue interest on a weekly basis, so you're highly advised to pay it as soon as you can. And then we now have the level 2 type of default. This happens when you miss more than 2 consecutive reports or payments. Keep in mind that the late fines still apply, of course, with the accrued interest. But what we'll do is your ISA could be converted to a loan with a monthly interest rate of 2.5%. That's on the unpaid balance at any given point. Because this is now what we term as hard default for us, you will be reported to the credit bureau and extreme cases could be pursued legally. We highly advise no one to get to level 2 type of default because that's when we start drawing the line as to legal default, which we report to credit bureaus. Do note that all the interest rates we are talking about are compounded monthly. And at the same time, whenever we decide to convert your ISA to a loan, whenever you have a hard default, which means you're not living up to your required obligations, it's not just lateness, these loans will be pursued by debt collectors instead of chapter in these particular cases. Now let's talk about level 3, and level 3 is on misrepresentation of income. Misrepresentation of income is illegal and is termed as financial fraud, and the implications are far much worse than that of hard default. Just like in hard default, you will still get your ISA converted into a loan with a 2.5% monthly interest rate. At the same time, we will still report you to the credit bureau as a defaulter. But because this is an illegal act and there's financial implications for this misrepresentation, we have the rights to sue for financial fraud. And this could either be Chapter or the school that gave you the financing. Do note that we do expect some small discrepancies in income reports. This is highly expected, right? However, if the discrepancy is too large, that's when we start thinking about misrepresentation. In case there's a small discrepancy, you'll just pay up the arrears, or in case you had an overpayment, we'll give you back the ISA refunds. And that's the clean system of making sure we clean up and reconcile accounts at the end of every year. Now, before you go, it's worth noting that income share agreements are not like debt. In no month will you have a payment obligation that is not in line with your income. At the same time, every payment warrants a positive credit report. This means because of your income share agreement, you can have a higher credit score when you make payments, and it becomes easier for you to borrow money in the future, even if this is not your typical type of loan. Finally, do note that you have freedom over your career choices. No one should restrict you as to what job you're supposed to take. And you can always opt not to sign this contract if you don't love any aspect of the contract and look for alternative financing methods, for example, bank loans, scholarships if you have availability to that. No one is forcing you to sign any contract in an income share agreement. Now, in summary, in part two, we've talked about student obligations. Remember your student obligations. Every month, you're supposed to make a report and a payment when due as well. Repayment term can be paused when you're not in full-time employment. Payments can be waived whenever you're in temporary hardship, but this is up to the discretion of chapter. We have 3 levels of default, each with different implications. Note that ISAs still call for positive credit reports. You have freedom over your own career choice, and no one is forcing you to opt into an income share agreement. So, what are the next steps? After watching this video, you should go ahead and do the ISA quiz below and assess your understanding of income share agreement contracts. You will not be allowed into any contract if you do not pass this particular quiz. It allows us to know that you understood everything we've talked about. If you've already applied for an ISA on our platform, just wait for your decision. You'll get an email on this. But if you're new and you've not applied yet, just go to our platform, app.chapterglobal.com, and you can apply if your school is an eligible school or you're part of one of our target countries. Whenever you have questions and inquiries, we have a chatbot pop up on our platform. You can also go to our help center, also on our platform, app.chapterglobal.com/help. And for any extreme areas where your help center can't help you, you can also email us at hello@chapterglobal.com. Thank you very much, and looking forward to supporting your education journey with an income share agreement.